Hello everyone, this is Mr. Jose here and welcome to my Bitcoin speculation videos. Thank you very much to Mr. Anonymous for their donation, In Vodka We Trust for their donation, Pansy Faust for his third BTC donation, and Jacob BTS for diligently sharing my work on Steemit. Congratulations Bitcoiners, we're easing through the $2,000 level. As I've mentioned in previous videos, these kinds of big price integers make a fantastic headline, so we can expect further interest in the cryptocurrency from those who didn't buy in earlier. With such a high price, the Bitcoin market cap, that is the price multiplied by the coin supply, beats out the M2 of several countries. But perhaps I should use the M3 with all the transaction backlog. I digress. Technical analysis. We talked about a target of 2.4k-ish based on the previous video, which was down in the 1700s, and there's no indication of change from that target. In the past week, we've been playing Pong with the Bitcoin price, except that the upside always loses like it's your younger sibling using the third-party controller. Breaking through the 100s, then bouncing down to the 50s, or maybe the last 100 integer at most. At time of production, we had a beautiful downside rejection candle, then a test of the 2270s before a possible break in trend. First, 4-hour candle width. Volume has recently developed a bearish divergence and made a lower high. Bollinger Bands remain at a constant width, indicating that this is yes, a slow and steady increasing price in a 4-hour time frame. Interesting that we're not seeing a period of consolidation as previously seen, indicating that this may be the blow off top. There is supporting evidence of this being the case, with it being New Money Monday, and Coinbase being emptied out by the new wire transfers. On a daily, things are not much different. This isn't a very compelling bullish candle with such a long wick in the top, showing that there's a strong sell-off, but there's also a very minor bounce in the bottom. Could this form a rough double top as seen on the 2013 bubble? Or possibly an ABCD bearish harmonic pattern? Let's have to wait and see. Well, maybe not $2,400, but just below it. I've drawn Fibonacci levels here which we can use to extrapolate up and outwards. Extrapolating to 1.618, we did see resistance in this zone in the middle of the round number $50 block, around the $70 if you will. TA is getting more and more interpretive here, but if we count this as confirmation of indicator, the next resistance zone would be around 2618 or $2,362. This does line up with last video's target, the Mt. Gox sell-off.
But wait, there's more!
There has been a recent leak from the Bitcoin consensus where we might yet again have consensus on SegWit. The document available at the link on screen and in the description below details the activation of SegWit with immediate effect, which is a contradiction of the BIP 141 proposal from 2015, which does require the node consensus. Presumably this means that the participants listed will only begin signaling if not already, which will cause consensus to be reached within 2 months. More worrying is the statement that a Bitcoin hard fork to 2 MB blocks will occur on September 21st. Bear in mind this is the second time that several of the participants have supported SegWit and signed so at the consensus. I digress. The altcoin rallies. Indeed, it seems that a lot of altcoins are getting a surge in liquidity, with both Ripple and Ethereum topping several headlines. On May 15th, Bitcoin switched from dominant to dominated, with altcoins accounting for less than half of the total cryptocurrency market cap. In just the 11 days between my last video, the network backlog has grown from 80,000 transactions to 130,000 transactions, with a high of 212,000 transactions on May 19th. At the time, with 101 Bitcoin in fees alone in limbo, that's 373,000 Bitcoins, or 2% of all Bitcoin, is sat waiting for confirmation. While the popular argument of simply increasing your fee paid to miners works in the short term, it has several downsides. First, miners have little to no financial incentive to progress the network forward, with the exception to their own political interests in the coin. Second, if theoretically everyone increased their fees paid, it forms a new baseline. The casual investors, or the enthusiast that transacts with the currency on a day-to-day basis, are incentivized to move to markets with more focus on immediate transactability. Until this problem is solved with a solution like segregated witness, Lightning Network, or a larger block size, we will see a diversion of liquidity until an equilibrium is reached. These are my thoughts. Experts link the Bitcoin price surge partly to Japanese and Korean trading. We now see a significant premium in both countries. While it's the Chinese that are known for their premium, $160 shown here, their mantle is taken by the Japanese with a monster $420 premium, and the South Koreans with a $630 premium. Japan and Korea now account for places 1 and 4 most active Bitcoin trading markets in the world. I think that just about wraps it up for this video. Thank you very much for watching, and cheers. Please like and subscribe if you'd like to see more content like this.